So Townsville property boom, how long can it actually last for?
Over the past sort of 5 years, Townsville's grown by, across the board, about 100%, but some suburbs up to 160%, which is crazy growth over a 5-year period.
So the median house price in Townsville at the moment is $597,000.
Yeah.
So that's up from $307 in 2019.
Yeah, that's purely the reason that this market's continuing to grow, because there's too many people and there's not enough property.
Big question, is it sustainable? My personal opinion is. So there's been a lot of media attention about Townsville and surrounding areas such as Charters Towers and some of those areas on the outskirts of Townsville, and clearly they're really big numbers.
Yeah.
You know, on average, I think it sits around 100% or 95% growth in 5 years. So you've doubled your property value in 5 years, which is substantial. But is that sustainable? You know, are we seeing a similar thing that's happening in Perth, where it was a very flat market for a certain amount of time, or a long time, I think it was around 20 years, and then there was something that stimulated and then off it went.
Yeah, so we can't just look at history and think that that's going to be what the future holds. So we need to look at the numbers, what's driving it, and what the government response is going to be. So let's get straight into that.
So I guess we look straight at the data. So the median house price in Townsville at the moment is $597,000.
Yeah.
So that's up from $307 in 2019.
Yeah.
So that's a big, that's a big increase. The last 12 months, there's been a 23% increase.
Yep.
So it would seem that a lot of that growth over the last 5 years has been within the last few years.
And in one of the suburbs, that's just the overall for Townsville itself, but one of the suburbs, which is, I think, Bowie Plains or Bowl Plains, its typical price is $785,000. So it is getting up there. That is an expensive market, especially for the incomes within that area. And for investors, a typical yield of 3.5%. But that market's had 30% growth over the past 12 months.
It's just huge. So huge prices in both units and houses. Units have also gone up around 25%.
Yeah.
So the average sitting around 304. Again, massive. So the rent isn't huge.
I mean, it's not, but when you put that into perspective, about $1,700 per month for rent, where the average year to the average years to own a property is around 30 years.
Yep.
So relatively, it's affordable to the rest of Australia. But when you compare it to incomes, it's actually quite expensive. And for rents to be up around that $1,700 per month, it's not expensive relative, but it is for the people who are leasing the properties.
100%. And for a regional centre, it's outperformed most capital cities.
Yeah.
So there's a reason why it's made headlines, and we'll unpack a little bit now what is actually driving this boom. So it's a massive gap between supply and demand.
Yeah.
It's as simple as that.
That's it.
There's big issues at the moment in Queensland with builds. So it's costing a shitload to build anything in Queensland at the moment. That's due to construction costs, so building supply costs. Trades are also being used a lot in government infrastructure, a lot up there as well in Queensland. So that's pushing everyone into the resale market or existing home market, which doesn't really add to supply because you're just reselling what you've already got.
Yeah.
So population growth, it is growing. Most of that's coming from migration from southern states.
Yeah,
so into city. It's not a huge amount of international immigration going into these regional capitals or regional cities, sorry.
It's looking at a forecast population of about 240,000 residents by 2035.
Yeah.
Which is, another 35,000 people, which as a percentage isn't a great deal, but for a town that's already undersupplied, it is.
It's look, it is quite a good amount. What's that, 20% in the next 10 years? Yeah. But there's other capitals and other places that are tipped to do more than that, which we've discussed in previous episodes.
Exactly.
If you want to look at that. So there is a bit of migration. I did read something that a lot of millennials and Gen Z are moving to these areas because of affordability, the ability to work remotely and online. Yeah. There is a lot of economic confidence in that area as well. There is a lot of spending.
And that's the thing, pre-2019,
wasn't much.
It wasn't a diverse economy.
No.
And they went and stimulated the market by flooding all of this investment and infrastructure, and hence why we've got an undersupplied market now. And they didn't do anything about supply before they funded all those projects.
So there's billions in infrastructure, port upgrades, airport upgrades, copper string, like I'm assuming that's a mine or something up there. I would say so. There's defence spending up there. There's energy spending. There's mining projects. There's a lot of reasons for people to want to be there. Reasonable yields, good low vacancy rates. So it's become quite popular because of these reasons with investors.
Yeah.
So, but investors aren't creating more supply.
And that's the thing they're
creating more demand.
Looking at, and for the actual supply metrics, that market that I said before of a typical price of around $790, which is getting up there, especially for investors, it's too expensive for people who are buying up there because the yield's too low.
Yep.
But for the owner occupiers getting up there, that's becoming unaffordable, and you can buy in other markets. But in terms of the actual supply, the inventory is less than a month, and that's been decreasing for the last 4 years, so it's just getting tighter. The stock on market is around 0.3%, which is there's just no stock coming to market in this region. So when we look at that's purely the reason that this market's continuing to grow, because there's too many people and there's not enough property.
Yep. So what's the government actually doing about this? So they are putting some measures in place, and I think this is part of the reason for me that sort of thinks that this isn't going to be sustainable, this growth. So basically the local council, the councils, they want to double supply, which is a lot. They want to double supply. So basically they're also doing incentives, and I think you had the numbers on it. They're offering $90,000.
They're offering $90,000 for anyone who subdivides their block of land.
Yep.
Which is
up to $275,000 worth of fees waived for the subdivision as well. Yep.
So it's like for a developer who's doing, say, unit complex, if it is medium to high density housing, if you're looking at some of the towns up there, you can buy a typical unit for about $400,000. If the developer's being subsidised $275,000 for the development,
that's huge.
It would almost cover his margins.
So there's
all their margins.
Yeah, we can't be like that, Aaron. So I've noted there's a $30 million spend for 2,700 homes in the Northern Beaches. I'm not sure where that is in that area. I'm not from there. There's also modular housing pilots underway in that area, and there's also affordable / housing, social housing builds being done in Garbutt. Probably pronounced that wrong. I do every time.
And we haven't, talking about that modular housing, that's just one point that we didn't even reference for the subdivisions. You don't have to subdivide your blocks in many respects to put a modular house on your block. So, that's increasing supply to cover that rental market. So what's going to happen to yields in that area as well?
So big question, is it sustainable? My personal opinion is yes for now. Mm-hmm. I think any of these things that are being put in place, they're going to take time.
Yeah.
I reckon the next 5 years you'll probably get some good growth. What happens after that?
I reckon it's still got 30% left in it.
Yeah.
But that'll take some suburbs to close to 200% growth in a 5 to 6 year period.
Yeah. And then there's a lot of stimulus for developers and to build these housing estates up there, which will happen.
Yeah.
And I think a lot of these will be done within the next 5 years.
Again, I think what confuses a lot of people as well, everyone sees 200% growth and is like, I want to jump on that growth. But there's two things to growth. There's the percentage and then there's the amount invested. You would have made more than $200,000 just by owning a house in Merriweather with a 5%.
Oh, easy.
5% increase. Where someone's spending $300,000, they might get this percentage growth, but they haven't got that much invested. So
it's only 60
you're
grand.
actually making more money than the people who are getting this growth.
So yes, I think you're on the same. We'll likely see prices start to stabilise within the next 5 years. I don't think they're going to crash and crash and burn or whatever the media is going to say. I think they'll start to stabilise and come back to sort of general growth levels.
That's the thing. Like when you've had such rapid growth, even if it does continue to trend up for about 30% before it starts to contract, it does confuse a lot of people because you might have 30% growth, say, over the next 12 to 24 months, and then it might start to contract before it plateaus. Even though a market's contracting, it's still growing, but it's not growing by that 30% in that year. So if you have 10% growth the following year, it still looks like a solid market because you've got 10% growth.
It's always good to look at.
But it's coming down. It's not going up.
Look at longer periods.
Yeah.
But I think going forward with this area, it is something could be good for people that have got short-term strategies, buying, renovating, flipping, that sort of thing. It could be really suited. You'd probably make back half of your construction costs in capital growth.
For the people who are willing to put in that extra work and do that research, try and jump on these government subsidies and buy these blocks that have the potential to subdivide.
Yep.
And, like you said, whether it's a modular house on one, renovation on the other, you try and cater the property to the market that you want to resell to.
Correct. So I think there is a good opportunity there for people that are wanting to buy, renovate, subdivide,
100%,
and build, flip them both.
Yeah.
That's a good market for that. But that's it for today. Nice and short, sweet one for Townsville. If there's any areas or suburbs you want us to review based on current, booms or busts, let us know and we're happy to look at them for you.
See you in the next one.
Thank you.